Welcome back to Seminar 6 of AC 2401 Accounting Information Systems at Nanyang Business School of Nanyang Technological University in Singapore. This is the second part of the revenue cycle. The readings for this seminar are listed here. This is the coverage for this seminar, and we start our journey with sales order processing. The revenue cycle is a give and get exchange where the company provides its goods or services to its customers in return for cash. An entity must be able to provide the right product in the right market at the right time and for the right price in order to continue as a going concern. Revenue is important for many reasons. It is the key ingredient in any business. Without it, you cannot earn a profit, pay expenses, and stay viable in the long run. Revenue is most prone to fraudulent reporting and is typically a risk area for the auditor. Therefore, an understanding of the revenue cycle provides a better understanding of how and why things can go wrong in the revenue cycle. This is a typical depiction of the revenue cycle. It contains components like the creation of a sales order, shipping of the product, billing or issuing an invoice to the customer, and finally, collecting cash from the customer. Note that this is a data flowchart. So does anything need to happen before this? Well, before the sales order, typically customers might seek a tender or quotation as part of pre-sales activity. Sales order entry involves taking an order from a credit-worthy customer and making sure that one has the stock on hand to deliver to the customer. A sales order is an internal document to process the transaction within the organization based on a customer's purchase order, essentially the originating document. The sales order would be standardized for the organization's purposes, as different customers could have purchase orders with different formats and templates. The sales order provides a level of internal control by ensuring completeness. This is an example of a sales order. Shipping refers to delivering the goods to the customer, and sometimes you would need to pick goods from the locations in your warehouse and pack them. The two different systems of keeping track of inventory can be reconciled by way of a physical stock count. The organization should also consider a buffer for picking tasks and time for delivery. This is a sample picking ticket. This is an illustrative packing list, which is typically required for cross-border customs checks. This is a sample of an inventory subsidiary ledger. It shows the running balance of a particular item of inventory. Billing refers to preparing an invoice to the customer when goods have been delivered or services rendered. The issuance of a sales invoice typically forms the basis for recognizing the sale and updating the corresponding accounts receivable. This is a sample of an invoice to a customer. The sales journal is a special journal that typically records credit sales. The debit and credit totals are periodically summed up and recorded in the GL. The accounts receivable subsidiary ledger tracks the transactions of the entity with each customer. This sub-ledger is periodically summed up and reconciled with the accounts receivable control account in the general ledger. The journal voucher is a document that records journal entries for periodic postings to update the GL. Journal entries like depreciation expense or accrued expenses are typically recorded via a journal voucher. The general ledger contains many accounts that record the entity's financial data, and this includes the accounts receivable control account. Next, we shall move into SAP SD. We have covered financial accounting, or FI, and will be covering the SD module. Else sales of goods involves inventory, we shall also be touching on the material management or MM module. Let's look at what is organizational data for the SD module. Organizational data comprises structural items like the client, company code, sales organization, plant, and shipping point. The sales organization is responsible for distribution of goods, negotiation of sales terms, and other related matters like product liability. It divides the market into geographical regions and is the highest level of aggregation in reporting of revenue. The cardinal relationship with the company is many to one. In other words, a company can have many sales organizations. These are the sales organizations for GBI. The US company has two sales organizations representing the eastern and western regions of the US. Likewise, the German company has two sales organizations for the north and south territories of Germany. The distribution channel is the means by which the entity delivers goods and services to its customers. Typical channels are wholesale, retail, and online or internet sales. Just as a company can have multiple sales organizations, the sales organization can also have multiple distribution channels. Each channel has its own strategies, approaches, and constraints for getting the goods and services to the customer. A sales organization must have at least one distribution channel, although it can have more than one. In addition, a distribution channel can be assigned to multiple sales organizations. We can see here that GBI has wholesale and internet sales distribution channels for the various sales organizations. Most companies consolidate materials and services with similar characteristics within a unit known as a division. Typically, each division is associated with the company's product line. A product or material can be assigned to one division only. Each division can employ its own sales strategies such as pricing agreements with customers. In addition, it is possible to aggregate reports at the division level. A sales organization must have at least one division. A division can be assigned to multiple sales organizations, and a sales organization can include many divisions. This chart displays the bike and accessories divisions for GBI. A sales area is a unique combination of sales organization, distribution channel, and division. In other words, it defines which distribution channel a sales organization uses to sell the products associated with a particular division. A sales area can be assigned to only one company code. All of the documents associated with the fulfillment process, such as quotations and packing lists, belong to one sales area. This figure illustrates the sales areas for GBI. So for example, the sales area UE00 plus WH plus BI is responsible for the sales by the Eastern US Sales Organization via the wholesale distribution channel for the bike division. A plant is an organizational element that performs multiple functions and is relevant to several processes. It is essentially a facility in which the functions like the following are performed: product and service creation, storage and distribution of materials, production planning, and performance of service or maintenance. A plant can be a factory, a warehouse, a regional distribution center, a service center, or an office. It can be part of a building, an entire building, or a collection of buildings. In addition, a single building can house multiple plants. Consider, for example, a company that has several offices in a building. Different services or activities, such as processing customer returns and providing technical support to customers, are performed in these offices. Each of these offices is defined as a separate plant. Just as a client can have multiple company codes, a company code can contain multiple plants. However, a plan can belong to only one company code. In this figure, we see that the US company has plants in Dallas, San Diego, and Miami. A shipping point is a location in a plant from which outbound deliveries are shipped. It can be a physical location such as a loading dock, a rail depot, or a mailroom. It can also be a designated group of employees who, for example, handle express or special deliveries. A shipping point is associated with one or more plants, and a plant can have more than one shipping point. A plant must have at least one shipping point from which to process deliveries, although the shipping point does not have to be physically located within the plant. Now let's look at SD master data. Master data represent entities or items associated with the enterprise and include customer, supplier, GL account, condition, and inventory or material master data. As shown in this screenshot, data can come from the customer master, the material master, or the sales condition master. Customer master data includes data needed to conduct business with customers and to execute transactions that are specifically related to the fulfillment process. The data in the customer master are divided into three segments: general data, accounting data, and sales area data. General data are defined at the client level. They are valid for all of a client's sales areas and company codes. Examples of general data are a customer's name, address, and account number. Accounting data are specific to a company code and include data such as payment terms and the reconciliation account in the general ledger. The accounting department will typically complete this part of the customer master data. Sales area data are specific to a particular sales area which, as discussed earlier, is made up of one sales organization, one distribution channel, and one division. Sales area data relate to sales, shipping, billing, and partner functions. Examples are the sales office and the currency in which the transaction is conducted. Shipping data specify the preferred delivering plan, priorities, and methods. They also define delivery tolerances and policies for dealing with partial deliveries. Billing data include billing terms and tax-related data. Let's look at the multiple definitions of a customer. A customer can also be a vendor and the concept of business partner. With the different business partner roles, one can gain access to different data of the customer master data as shown in this figure. Because the material master is used in numerous processes, it must include a large amount of data. To manage these data, the material master groups them into different categories or views, each of which is relevant to one or more processes. Basic data such as material number, description, and weight are relevant to almost all processes. The other views are relevant only to certain processes. For example, purchasing data are relevant to the procurement process and sales data to the fulfillment process. Condition master data includes items, prices, discounts, and taxes, and these can be defined to be dependent on various data that are material specific or customer specific. The seminar will continue in the third and final part next.